Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indici vicinissimi alla parità dopo un'altra settimana record, ma ne parliamo con il mio ospite qui sul floor. Come vedete è Kenneth Polcari, che è il direttore delle operazioni sul floor per O'Neil Securities. Kenny, ben ritrovato.
Buongiorno, come va?
Benissimo, you're so tan and happy today.
I just went away for the weekend. I read my newspaper on the beach, and that was it.
Yeah, well, we have a different skin, I guess. Well, anyway, I was saying that today we are really flat. We had a record for the 22nd time this year for the S&P 500, not too far from important levels. So now it's going to be a very probably busy week with the economic data. What is going on? What is the market is going to do this week?
There's a couple of things. Yes, the market's going to focus on the data. It's also going to continue to focus on kind of the increasing tensions that are happening in Iraq and the Middle East, right? We heard over the weekend that the militants took more control of the Iraq-Jordan border and the Iraq-Syrian border, so creating some, unsettled emotions around the world as traders and investors and really political leaders watch as this kind of unfolds. So that's going to be simmering always over here on the side. In the meantime, we've got the U.S. macro data this week. We've got 18 IPOs that are going to happen here this week. And so it's going to be a very, very busy week in terms of initial public offerings. It's going to draw a lot of money into these IPOs, away from kind of the broader market as asset managers and traders look for new opportunities in these IPOs, right? So it'll draw some money away from that. So we might actually see the market just churn here. There's no real reason for it to move much higher from here at the moment. We saw that on Wednesday after Janet Yellen came out with kind of an innocuous Fed statement. She didn't say anything new. They actually took GDP down for 2014, kept it at, the 3% range for 2015, talked about rates going up marginally, and yet traders and investors took the market to all-time highs. And in celebration, because what she didn't say was that rates were going up faster or sooner than expected. It's kind of the status quo. And so, rates will remain low for as far as the eye can see, quite honestly. And so therefore, traders had that emotional reaction, right? We're approaching Dow 17,000. It's going to be very interesting because psychologically it's a round number, but what does it really mean? It doesn't really mean anything, but what happens is when you break through psychologically big round numbers like that, it causes renewed excitement, it causes people to reevaluate, it causes people to say, oh my God, I don't want to miss this, and they jump on board, which is exactly maybe not necessarily the right thing to do.
And also, Kenny, if we read all the signals right, I mean, we usually monitor M&A to have an idea on the market. Now we monitor also the IPOs. It's a high concentration, 18 in 1 week. What they can really tell us that maybe companies, they really want to chase the moment, and they are scared that we're going to have a bad market in a few months?
Well, I think you could exactly read that into it, right? People wanting to get on board, feeling like here we are approaching all-time highs, Dow 17,000, S&P 2,000. There's all this excitement. There's a lot of M&A activity, which is creating kind of renewed interest. And so you've got a lot of IPOs, a lot of these new firms saying, let me strike while the iron's hot. The investors are out there, activity is good, rates are low, let me get out there and put my stock out. And so it very well could be that. It could also be that it's just ready, right? Is that it's ready for them and it's just a coincidence. My sense, though, is more like they're going to strike while the iron's hot because people are very cautious. This has been the most hated rally of all time. And quite honestly, if you sit and you think about it, if rates start to normalize and monetary policy starts to normalize, will the market really be trading at these levels? Doesn't mean it's going to collapse, but will the market retest lower and build a base before once again moving higher? And I think that's absolutely the story.
And also, Kenny, we have the ECB, so we are not going to know for a while, if the market can really trade on the fundamentals, because the Federal Reserve will stop, throwing a lot of liquidity on the market, but then it will be the ECB turn.
And the Bank of Japan and the People's Bank of China, and so all these other central banks. But this has been the story for the last 5 years during this crisis. Understood that they all came together when it was the darkest. And I got all that. But at some point, central banks have to kind of back off and allow the market to do what it needs to do. And if that means it needs to go lower first to build a base, then that's what it needs to do. But as long as everyone's throwing money at it and keeping rates artificially low, it's going to be very difficult for the market to do that. And so I think, going back to the IPO issue, I think that, these guys want to get it out there. They want to strike while the iron's hot.
Now, going back instead to this week, the economic indicators that we are going to have today already, we started to have some numbers from the housing market. Manufacturing is a big deal. We'll be having like really mixed signals from China, from Europe, where it's still very weak. China is, for now, is better than expectation. Here, another story.
But if you noticed overnight, the PMI numbers both in Japan and China were better than expected, and actually they're both above 50. 50 being that pivot point, right? Between above 50s expansionary, below 50s contractionary. They both now above 50. Yet when you go over to Europe, the European PMI actually was strong. It was weaker a little bit than last month, but still above 50. Although the French PMI just fell right off the edge, right? They went from 49.8 to 47.8. I mean, a big dramatic move. Doesn't really say a whole lot for France at the moment, but that's those mixed signals that we keep getting. And so investors continue to kind of be cautious and scratch their head. And certainly it becomes much more of an individual stock picker's game versus maybe a broad market move.
Also now is the topic of really the economy is bouncing back after a very bad first quarter. This week we're going to read another reading of the GDP, and according to the economists, we might even see a minus 1.8%. You know, the contraction might have been even wider in the first trimester.
Right, but what's interesting is they've been telegraphing that, right? They've been talking about, they got everybody prepared for it. Even Janet Yellen got it. And so therefore, when it happens and when it comes out, I think it's Thursday, right? When it comes out, people should not be surprised because it's not like they've kept it a secret, and you know people are expecting it's going to be a negative number, right? They're expecting that.
Can we really bounce back that much from the first 3 months of the year?
Well, listen, I think it's going to be difficult, but yet you listen to all these analysts and strategists, and they think it's full steam ahead. I don't see it yet. Although I'm not an economist per se, I just don't see it. I don't feel it. But yet, I guess we'll see as we move into the reporting of the second quarter.
So let's talk about numbers. We were saying we're going to look at the economic indicators. We are really churning, as you usually say,
right,
around record levels. What are your expectations?
Well, listen, I think if we challenge Dow 17,000 or S&P 2,000, which I think we're going to do, I actually. Well, we're not far. We're only on the Dow. We're 80 points away, right? I actually thought that it was going to be earlier in the week, Monday, Tuesday, Wednesday, that maybe we were going to challenge it. I think, though, that geopolitical issue, instability, has kind of put a damper on it, even though in the face of kind of better global macro numbers out of Japan and China, those numbers should have caused more excitement. But I think, the instability is causing investors at the moment just to say, you know what, let me take a breath here for a minute and see how this unfolds. So one way or the other, as we challenge it, I think what's going to happen is big institutional players, it's going to bring out some real selling. I don't think you're going to get that push up and through. I think you'll test it, and you'll back off, and you'll test it, and you'll back off. And it's going to have to do that 2 or 3 times before I think it really gets enough momentum to push up and through.
It might happen for more than 1 week, Kenny.
Right. Absolutely. We may test it and back off. It may end up churning then for a couple of weeks, right? A lot's going to be dictated by the macro data and by the geopolitical issues.
Perfect. We'll see. Have a great week, Kenny.
Thank you, and you.
E grazie a voi per l'attenzione. Alla prossima.